Here's the Castle Pines New Communities Real Estate Market Update for the third quarter of 2024. The new communities are the communities built in Castle Pines since 2015, including the developments along Legay Ranch and the canyons on the east side of I-25. Overall, inventory has stayed relatively steady from May to September, but the September numbers are high compared to what we saw a year ago. In addition, the number of sales is at a low level compared to what we saw over the prior couple of years, but despite higher inventory and low sales, we are seeing home prices stay steady in the new communities. Let's take a look at the active listings or homes available for sale currently. If you look at this chart here, what you see is that inventory has stayed relatively static over the last 3 to 4 months, but there were 32 homes for sale at the end of September, which is 66% higher than the 4-year average of 19 homes for sale at the end of September. So the inventory numbers have climbed. If you go back and you look at inventory levels in early 2019, those were so low because the new communities were just starting to be built and there were very few homes for sale at that time. The next chart here shows sold listings in the new communities. And again, if you look, the sales levels are relatively low compared to historical standards, but they have been holding steady throughout most of 2024. If you look, there have been 69 sales through the first 3 quarters, and only 17 of those sales were new build sales. And it's important to remember as you look at the new communities that the builders are still building a fair number of homes in here, and the builders do not report all sales or listings that are active into the MLS system, which is where I pull this data. So what we're talking about here is underreporting overall activity. So if you look at the inventory numbers, they actually are a little bit higher because the builders don't have all of their active inventory in the MLS system, and they don't report all of their sales in the MLS system. But if you do look, there were 6 homes that sold in September, which has been consistent again for 2024, but 41% below the September average of 10 homes selling over the last 4 years in the month of September. And again, if you look at this chart, the orange line at the beginning is the rolling 12-month average. And if you look, sales were incredibly low in 2019, but that was because, again, the new communities, there was very little building going on, and the building didn't really ramp up till late 2019 and into 2020. If you look what's going on with average home prices, which is the next chart, there's 2 things listed here. You have the average sales price, and then you have the average sales price per total square feet. And again, because there are so few sales in the new communities, you have to adjust for product mix changes. So if bigger homes sell, of course, it's going to drive up the average home price. The dollar per square foot average helps adjust for that, as well as looking at the 12-month rolling average, which is a good indicator because it shows what's gone on over the prior 12 months. And specifically, if you look at this chart, I'm looking at the red line, which is the average dollar per total square foot of sales. And if you see what's circled in the purple box here, or what's included in the purple box, the average sales price per total square foot has stayed relatively steady over the last couple years in the new communities. The average sales price, which is the orange line, the 12-month rolling average, has dropped a little bit, but that's because in 2023 and early 2024, Infinity, which was building the largest and most expensive homes in the new communities, was selling out its inventory, and they're not building those homes anymore or selling any homes at that price point, which we're selling in the high 1s, low 2s, and even up to $3 million. And so that's going to drive your average home price down because there's not those high-end sales included. So again, if you look at the average prices based upon dollar per square foot and adjusting for product mix, home prices are staying relatively steady. And it's important to remember too in the new communities that the builder does control a lot of the home pricing, even though the number of sales relatively to resales, new sales versus resales, is coming into equilibrium. The builders still will drive the home pricing, and resellers have to match up with what the builder is willing to sell their homes for. This next chart here that I want to share with you shows months in inventory, which is a gauge of supply and demand in the market. So months in inventory is how many months it would take to sell out the existing inventory if no new homes came on the market. And typically what you see is if inventory is under 2 months, months in inventory is under 2 months, you'll see home prices accelerating or increasing substantially. If they're 3 to 4 months, you'll see home prices increasing slightly. And as you start to move between 4 to 5 months, they stay steady, and above 5 months, they'll start to fall back. And if you look at this chart here, what you'll see is the blue line is the average sales price, rolling 12-month average sales price. And the orange line is the months in inventory. So if you look here, starting in 2019, months in inventory was high, running around 4 to 5 months on average, and so home prices stayed relatively steady. Then as months in inventory fell, as COVID started, you see that home prices started to creep up, and the lower inventory the orange line got, the more vertical the average home price increased, or the more substantially it increased. And what we're seeing is you've seen a steady climb in months in inventory over the last year to year and a half, because again, we're seeing inventory building and sales slowing, so that increases months in inventory. And again, as we talked about, the average home price is staying relatively steady, but if we continue to see months in inventory climb, my assumption is that once we can stay above 5 months of inventory for several months, we might start to see some price pressure down in the new communities. The last item I want to share with you is the average days to sell. And the average days to sell in the new communities was 51 days in September. But again, you can have a strong variability because of the few sales. So if you look at a 3-month rolling average, it was 43 days for the prior 3 months. And that's a respectable days on market. That's not incredibly long, it's not incredibly short. It's about what we're seeing in the Metro Denver market. So my expectation is going into the winter months, we'll see days on market climb a little bit. That's more of a seasonal thing, but it is taking a little bit longer for homes to sell in general. So in summary, we're expecting the home prices to stay relatively steady in the new communities. Again, I'll be watching that months in inventory number. Once that starts to stay above 5 months substantially for several months in a row, then we'll probably see some pricing pressure down. But at this point, we're expecting home prices to stay relatively steady in the near future in the new communities. If you have more questions about your home specifically in the new communities or what's going on in your specific neighborhood, please give me a call at 303-886-3437. Again, 303-886-3437.